Hello everyone, this is Professor Raghavendra Adhyapak, KLS Kokti College of Commerce, Belagavi. So in today's class, we are going to begin with the fifth unit, that is investor protection. Okay, so this is a small unit. First, we will finish off this fifth unit, then we will move to the fourth unit. In the fourth unit, we have some problems as well as some theory part. Okay, so there are some problems in the fourth unit, so that we will discuss in the later classes. First, we will finish off with the unit number 5, that is investor protection. Okay, so first we will see what is the investors protection, what it means. Okay, the term investor product protection defines the entity of efforts and activities to observe, safeguard, and enforce the right and claims of a person in his role as an investor. This includes advice and legal actions. Okay, so in simple terms, we can say that investor protection means safeguard of the investors. Okay, so whoever person is going to invest in different companies, there should be some assurity or safeguard for their money, correct? So providing that safeguard, okay, to those who are invested, that is known as investor protection. Okay, so what it includes, this investor protection includes advice and legal actions. So what it means, advice means what, where to invest, how to invest, right? So regarding that, they will provide the advices, means which companies are doing well, on which companies we can invest, which companies performance is poor, where we not invest. Okay, so regarding that, many different advices we provide, that is one of the investor protection. And also this is that legal action. Okay, so if there is any fault in their business, or there is any uh, unfair trading is going on, okay, so in that case, the investor have the legal rights to take the action against those companies. Okay, so that is also comes under the investor protection. Okay, so this is that, with the help of advice, or maybe in the case of legal actions, overall safeguard of the investor is known as the investor protection. Okay, so the assumption of a need of protection is based on the experience that financial investors are usually structurally inferior to provides financial services and products due to lack of professional knowledge, information, or experience. Okay, so further this is that why this investor protection is required, because the investor, one who is going to invest, he don't have, that person is don't having a full knowledge, okay, regarding that investment. Okay, and this is that they don't have a professional knowledge or any prior information or prior experience in that field, correct? So when we don't have proper knowledge, without any experience, whenever we invest, that is the risk, correct? So to protect them, those who are investing there without any prior knowledge or professional knowledge, so to invest there, to protect their investment, the investors protection is required. Okay, the countries with the stronger investor protections tends to grow faster than with the poor investor protections. So what will happen in this affects in the overall country's performance. Okay, for example, there is one good country, they're providing the all the safeguard measure for the investor, means the investor feels protected. Okay, so they feel that government is there, proper rules and regulations are there, even though something has happened unfairly with our investment, for that government is assured 100% they will return back our money. Okay, so with that confident, people will invest more and more for the companies and development of the country, correct? But if the country's rules and regulations are not so good or proper in case of investor protection, then as an investor we hesitate. Okay, we hesitate to invest there. Why? Because of there is no proper surety or safeguard that we get our money return, correct? So this is that where the countries having the good investor protection, they will grow faster than the poor protections of the countries, correct? So this is about what is exactly investor protection and how it works and for whom it is required and all these things. Okay, next is Sebi. Okay, So I think many have heard about this SEBI. What is SEBI? Securities and Exchange Board of India. Okay, so what it will do, usually in India, SEBI, RBI, MOF, these all are the different authorities who are constantly working for the investor protections. They're making the certain rules, regulations, okay, guidelines. With all those proper measures, they're trying to protect the investors right. Okay, so in that, yes, SEBI, that is Securities and Exchange Board of India, is also playing one of the crucial role in the investors protection. Okay, so this is actually established in 1988 but came into force for the operational effectively from 1992. Okay, so SEBI was started in 1992. Okay, so investors are the pillar or the skeleton of the security market, and their protection is the paramount consideration of the SEBI. Okay, what SEBI will do, they look after the all the transaction of the markets, okay, security market. Okay, so in that case, the investors are the main pillars of that market. Okay, so protecting their investors protection, okay, that is one of the crucial part of the SEBI. Okay, the rule of caveat emptor, what is that? Let the buyer be aware. Okay, so I hope you know about this, let the buyer be aware. Okay, so what this rule says, that whenever person is purchasing anything, he should know about it, and with their own knowledge and risk, you have to purchase, and he should not blame the seller. That let buyer be aware says that. Okay, so but this rules is not applicable in the everywhere. Okay, so in this, especially in the securities market, that rule cannot be applicable. There should be proper measures. Okay, we cannot blindly purchase anything on the securities market. There should be proper knowledge, experience. Okay, so after studying these all things only we can invest, correct? So in that case, to protect the investors, this SEBI is playing a very important role. Okay, therefore the number of authorities like RBI, SEBI, MOF, that is Minister of Finance, came with the relevant rules and guidelines, and often functions together for the investors protection. And SEBI, especially being an official regulatory of security market, also working effectively in investors protection. Okay, so after studying these all things, we can say that SEBI is also playing a very crucial roles, and they're following certain rules, regulation, and providing the guidelines for the investors to protect them from the different frauds. Okay, next is about investor protection measures by the SEBI. Okay, so what are the different measures SEBI has taken to protect the investors? Regarding that, we will study. First one is formulation of stock exchange and other securities market business regulations. Okay, so they, what the SEBI has done, they have done the proper formulation of the rules and regulations or guidelines for the working of the security market. Okay, so there are proper rules and regulation that all the securities market should follow. Next is registering and regulating the intermediaries of the business like brokers, transfer agents, bankers, trustees, registrars, portfolio managers, investment consultants, merchant bankers, etc. Okay, so we know that when we go for the securities market, there are different middlemen, or the different uh, intermediaries are there, like brokers, transfer agents, bankers, trustees, etc. Right, so who all are working the different positions or playing a different roles in the securities market. For them also, the SEBI is giving the proper rules, regulations, and guidelines, and regulating them, what to do, how to work there, what are the different procedures they have to follow. As a banker, what he has to do. As a transfer agent, what are the different his work to do, what is the procedure they have to follow. Regarding that, they given the detailed information. Third one is recording and monitoring the work of custodian, depositors, participants, foreign investors, credit rating agencies, etc. Okay, so we already know that there are custodians, there are depositories, and other participants are there, correct? So credit rating agencies are there. So for these different institutions also, the SEBI is giving the proper guidelines and controlling them to protect the investors. Okay, registering investment scheme like mutual fund and venture capital funds and regulating their functions. Apart from this, they also controlling the function of what mutual funds and venture capitals. Okay, promotion and controlling of self-regulatory companies. So these are the different measures. Apart from that, some more are there, keeping check on frauds and unfair trade methods relating to security markets. Okay, what SEBI will do, they'll keep eyes on the any unfair practices are happening on securities market or no. With that, they will look after those transactions and all. Okay, observing and regulating the major transaction and takeover of the companies. Okay, so how the takeovers are take place, sometime insider trading will take place. So regarding that, the SEBI will look after. Carry out the investor awareness and education program. This is basically required for everybody now in the investment field. Okay, because when investor get educated or knowledge regarding the investment, the fraud chances will come to down or it will reduce. Correct, educated one who know about the market condition, they will not go for the any such kind of frauds. But those who are unaware of that, don't have proper knowledge, easily they will get it stuck into the frauds. Correct. So what SEBI is doing, they're making the more and more investors awareness and education programs where they're giving the different information regarding the security market, how to invest, at what time to invest. Okay, so these all different educational programs they are doing for the investors awareness. Okay, train the intermediaries of the business. Okay, so we studied about the different intermediaries. Correct. So for those intermediaries, SEBI is conducting the training program. Okay, so how to carry their business properly for the protection of investors. Okay, next is inspecting and auditing of the securities exchange and intermediaries. Okay, so what is auditing? We know that checking the correctness. Correct. So the even the SEBI is playing the crucial role by taking the audit of those securities exchanges. Means what? They will check the correctness, how properly security exchanges are working, and they control over the intermediaries. They're checking the working condition of the intermediaries, whether they're following all the rules, regulation, guidelines or no. Right? So if there is any mistake, to make them correct, the Securities Exchange Board of India is playing the one of the important role in that case also. Next is assessment of fees and other charges. Okay, while investment, doing any investment in any companies, we have to pay certain charges or certain fees. Correct. So if we take the any help of the intermediaries, they will charges for their services. Correct, we have to pay the charges. So the SEBI will control over those charges, whether they are charging overly or not, or they're taking the proper money or a reasonable amount or which is set up by the SEBI. As per that, they're collecting the monies or fees or charges or no. So these all things will be checked by the SEBI. Okay, so these are the different measures which SEBI is taken to protect the investors. Okay, so remaining part we will see in the next class.